the macro. No, turn it off. Yeah. All right. Hey, good morning. Boo. It is 6:30 on the dot on Wall Street, 3 hours before the market open. It's time to get your macro on. Welcome to QuantBox Live, where we uncover the best fundamental opportunities across global markets. My name is Wayne McDonald. I'm the founder, but I'm also a Harvard-trained economist. I also have a master's degree in financial management. But anyways, I love the econ, in particular macroeconomics, because it tracks global money flow, and that creates fundamental trends in the currency markets, in the stock markets, in the bond markets, so on and so forth. So I love it because it sets things up before I even look at a technical chart. So anyways, hey, if you're watching this on YouTube, you're watching it hours and hours and hours delayed. We're doing this live. You're welcome to join us. You can visit quantbox.co, sign up for a trial for only $8 for a week. So you get to look at all the pretty colors and say, oh my God. Yeah, but inside of that is also a training course on macroeconomics, which is about 16 hours long. So you can knock that out for $8. Plus, there's another course on statistical analysis, so you know how to read QuantBox. You can knock that out, all for a lousy $8. And you can join us in the mornings. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So I'd like to point out that today is the day that we do our Q3 Global Market Outlook. In January, we did an outlook like this, and we had the second quarter as an up quarter. Up. What does that mean? Stock market's up. Dollar weak, yen weak, that kind of stuff. I think by and large that worked out really nice. So anyways, that's today. That's today at 10:30. That's not even that far away, huh? So get on with it. Join us. Let's log into the database and see what is. Choose the right Gmail associated with my QuantBox account. Here we are logging into the Google Cloud. All right, little mixed right now, slightly bearish. Right, slightly bearish. Taking a look at Bitcoin down 0.76, euro dollar flat, S&P 500 slightly up, gold up 0.5%, oil up even more, 10-year T-note flat. All right, so maybe, well, this is weird because this is risk off and this is risk on. Oil is trading in a whole different world right now. It's doing something different. Well, it's doing supply and demand of oil, actually, which is pretty good. So we went quite some time when it was not trading based on supply and demand, but by, let's say, manipulation. Although I think 13 weeks in a row, we've still been tapping the SPR. Did you know that? They told us it was over. But it's been 13 weeks in a row, and I'm like, I don't know, I'm a stickler for like terminology, but I think that means you haven't stopped, right? 13 weeks and you're still tapping the SPR. So anyways, you can see a lot of neutrality on the south side, okay? And everything that has been bullish is still bullish. Okay, 3s and 4s and a -1. So, okay, that's about the same. Oh, I unlocked something new. Forgot about this. I thought this might be helpful, especially since today I'm doing my outlook. You might want to take a different look at seasonality. This is seasonality for the US dollar. Against CAD, against Kiwi, against Aussie, against Euro, against Pound, and against the yen. I created this for the last quarterly outlook. And I thought, why don't you have it? So there you go. compliments of the firm. That just saves some time. You don't have to flip around. You might be able to see patterns a little more clearly. Although I would move that there and that there, and I'd move things around. But anyways, you'll figure it out. Cool. So that's that. That you might find that helpful. I might have unlocked something else. I know I unlocked a couple of things and then I relocked them because I wasn't perfectly happy. Okay, we did GDP and inflation. We already did that. Okay, I guess that's it for now. Where this? There we go. I'm going to do the scatter plot. Okay, bearish, unexpected. Kiwi down, euro dollar down, Swiss yen down, pound yen down, CAD yen down. Now remember that these scores are created primarily off economic data, and then we add in seasonality, and then we add in technical analysis, right? But it's still primarily economic data. One thing that we know about the yen pairs is the seasonality changes. Right? And so, like, here's one we've been sitting on a long time. Oh, I'm going to move that one out. I added a second one, but I didn't even notice that. Well, I guess I was sleeping. We got caught on a bottom. Ooh, I don't like that. But anyways, what I was talking about is this is a seasonal thing. It's not an economic thing. And it's interesting. If we bounce off of here, this is a real problem for bears. And in this case, I have where's my other trade? What the heck? I had two trades on this. Oh, whoa, sorry. It's way up there. sorry. It's such a problem, right? Oh my God, sorry. It's way at the top. Sorry. Anyways. Yeah, that is a problem. So I'm going to move this. I might be able to survive this. But that's an unfortunate hiccup right there, because it's an important pivot. That's an M2. If there were bulls or there. So, anyways, I jammed that. So I had a second trade on. I shorted around what is that, 81.30, and it dropped as low as 80.60. So I was up 50-60 pips on the second trade. So it felt like it was going good directionally, but it looks like I've lost that. Where there was another one to talk about. It's not that. Ooh, look at that bottom. Amazing. Dollar week, just amazing since Canada Day, huh? Just amazing, just boom, instant dollar weakness, in particular against that yen. I wanted to point something particularly out, but now I don't remember what it was. 15-minute chart. Anyways, I'm not sure what it was. We're just tickling the bottom here, huh? Boom, 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 boom. Bearish, cautious, bearish, confident. The thing is, you have this pattern going on here. Okay. So you want to keep riding that 21 down. Really. Because you want to stay bearish until it's no longer bearish, and that doesn't look bullish, does it? So it's like this idea. And you keep doing that until it does something different, right? Has it done that yet? No. And in fact, it hasn't even hinted at that. So that might be coming, but it's not there today. Going back to the Aussie, we're caught between the 21 and 55. So that gives me very little direction. Technically, this is bearish. The bearish sell prices for the week are here and here. So those are bearish trade plans that have already occurred. So getting in now is actually quite late in the game, but this is, I guess, the pattern that still needs to be fulfilled. But the circles are, if you're a bear, are where you should have entered by now. They're just common swing trades. And in particular, the second one, if you're trading this, this is a lower low relative to that low. Okay, and that is a lower high, which is your sell, which is the central pivot for the week and the month. Okay, so if that ain't good enough in a technical downtrend, then you've passed or you're not watching it, which is fine. You don't have to trade it, but just saying, if you're a bear, you should be moving your stop probably pretty soon. Really, what I prefer before moving stops. Oh, there it is. What I prefer before moving stops is that it makes the new lower low, makes a new lower high. Okay. And then as soon as it drops this way, you're able to move your stop to -3 pips, AKA breaking. You don't want to move it too quick. But sometimes you have to. That's all. Sometimes you have to, but you don't want to. Or you shouldn't want to. Ooh, no, I'm going to get stumped down. See, like getting rejected after a double bottom, that's a good time to get out. Yeah, we have CAD news today, but we also have retail sales and industrial production capacity utilization. So those are pretty decent events today. Oh my God, no. What else do I have? Pound yen, Kiwi yen. I guess that's it. Did we do Kiwi yen? Kiwi yen. No, we didn't even do Kiwi yen. I don't even have Kiwi yen on here. Let's add Kiwi yen. Boop 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 boop. Okay, that's okay. That one held a little better. It didn't bottom out like the other one. So again, what I would prefer to do under risk management is an up and then a down, and then I jam my stop. Okay. Can you see the entry? Okay. Lower low, lower high. Okay. Lower low, lower high, sell. Just like I showed you on the other one, right? Ciao. And then the other one double bottom. I don't like that. So I guess it was pound yen. Pound yen double bottom. That bothers me. Andrew, you're on the West Coast. Cool. And I guess I should put these properly. I mean, I just sometimes I don't see them. I just override everything mentally. Austin, Texas. Yeah. So we're going to meet up in September, huh? Cool. Let's zip around. Let's go look at some commodities. Here's that oil trade I set up. Of course, we're right between the two plans. But oil, what was up? 0.75% today? Yeah. Oh, that's right. You're going to be in Montana. So my conference is downtown. I think I'm at the Marriott, just because it's at the Marriott, and I'm a Marriott guy, but I hate Marriott. But there's a cool old hotel about 3 blocks away from the ugly Marriott, and it's a cool old hotel, and they have on the second story a cool old bar, and it's got a big outdoor patio, if you will, um, overlooking the street below. And I think that's where I want us to set up shop for our cocktails and appetizers. I don't know if you know the place. I'd remember the name if you knew it, but I can't remember. Okay, here's our gold trade. How'd I do? Yeah, it looks all right. Isn't it better to plan trades out 2-3 days in advance? Lovely, right? That was a Thursday trade, showed up on a Monday, and now here it is Tuesday, and we're about to make a higher high. Cool. I think we talked about it yesterday too, as it was down, and there's that target up in here. Okay. That's about the right price, Andrew, for Hilton. That's about right. Free is about right. Yeah, up, and away. Very cool. That's all. That just shows like the risk on. We were talking yesterday about how the stock markets were slightly up to flat, but I was looking at some research here. Let me go back to the research. Leadership for the stock market that went slightly up yesterday. Principally Apple, Tesla, Nvidia. And a little bit of Microsoft because they're getting out of some legal problems. If you took that away, it wouldn't have been a decent day. There's some conflicting data I'm going to show you today. So it shows us we're in the middle of a cycle, I think. But there's some interesting things that in our economy that are working, but there's some major red flags, right, that we have to consider for the near future. One of them I'll show you. I'll show you today economic conditions that have occurred, I think, what, 7 times over the last 50 years. And every single time a recession shows up. And then I'll show you where we are now. And everything's right. You're like, I want to buy Nvidia. It's going to go to $1,000 a share. Like, be careful. Be careful. I don't know the future, but holy smoke, some of these charts I'm going to show you, you're going to go, oh, whoa, interesting. And even if you don't have a goatee, you're going to want to do this. You're like, Or my favorite, if you have a mole with a big long hair on it, you can roll that mole hair and you're like, very interesting. Very, very interesting. Like, do one of these. Yeah. It's some of this stuff is like Are we back to COVID levels? Are we not back to COVID levels? Okay, I'll show you a whole bunch of stuff like that. But then you're like, but are we better than before? Are we worse? Is there a recession coming or not? And there's some pretty interesting things. And one of the things I'm going to show you, so my charts are this time, they're not going to be PowerPoints, they're going to be dynamic charts pulled from the Fed. So I'll say, like, for example, hey, here's a chart of the assets on the Fed's balance sheet. What do you think of this? And you're like, ooh, it's gone up since COVID. Yeah. So, like, in what context? Like, if you don't know what's normal, if I showed you it went up $1 trillion or something, you're like, yeah, okay. But if it went from 6 trillion to 7 trillion, you're like, well, that's not that big of a deal. But if I zoom out and show you the historical norm, your jaw is going to drop. So I'll click a button, go, here's 30 years of the Fed's balance sheet. And you'll see the context of where we are right now, where we've been recently, and what is normal. And your jaw will drop when you find out where we are in the context of history. So anyways, I hope this is the least boring economics presentation you've ever seen. And that's a big ask, I know. Big ask. Brant. So, you know, this is a buyer of a dipper. This is a buyer of a dipper. Yeah, fits and starts on this Bitcoin, huh? Look at that. We're right on $30,000 right now. So does this help us for risk on, risk off? No. But we are, if you were going to be a buyer, you could. I think, like, let's not look at this on a 15. Let's go out to a 4H. Let's get serious now. All right. This is ever so slightly bearish. And I'd even argue bearish to neutral. Okay, like it's still rangy, right? Look at all this period. It is technically bearish though. You have, if you wanted to be a bear, this is how I think I would translate this. If you wanted to be a bear on Bitcoin, you have permission to engage. It's going to be a bit of a battle because we don't have a clear lower low, lower high. But you could play it. You could try something like this, and then the next one get on with it, right? But that's your decision. That's your alpha. It is technically bearish by a bit. Can you see the MACD? Oh, I actually have a MACD. It's just crossing below the waterline. See? 1, 2 instances below the waterline. Oh, Jim's like, sounds like it might be worth the price of admission. I'm gunning for $11 in value. That's my goal. I'm trying to overachieve. $11 doesn't buy you much anymore, does it? I'm definitely becoming like grandparent type stuff. You know, like remember when your grandpa would say, "Well, it used to cost me a nickel," and you're like, "Grandpa, it's $3 now." Now you go to McDonald's and you're like, "I remember this was a $1.99 meal, right? You got a hamburger, fries, and a Coke for $1.99. What the hell is this $12 a person nonsense, right?" And the thing is, the food has gotten terrible. They're like, here's an undercooked, dry hamburger patty, one thin slice of lettuce. You're like, dude, seriously, like the picture. Have you seen the picture, bro? It's this big, right? I want stacks of lettuce. I want tomato and onions, right? Nah, good enough. Good enough. Have you ever like had like the bag almost thrown into your car? Like, here you go. Like, dude, that's why I like in Asia when they hand you your, hand you stuff. They're like, with two hands. There you go. Right. Thank you. That's so pleasant. So pleasant. But anyways, yeah. So I'm gunning for $11. I'm going to hand you this information with with respect, with two hands, and I'll bow too. I'll avert my eyes, Jim. I'll avert my eyes. Thank you so much for coming. Anyways, I'm super psyched about it. It's pretty. I mean, I'm telling you, it's pretty stuff. I can give you a look at it. Isn't that cool? Crude oil prices, like that's sweet, isn't it? It's going to be pretty. Huh? It's going to be pretty. All right. So, so yeah, almost ready. Almost ready. I guess we'll zoom into the S&P. I got to go shorter time frame. There's just too much going on there. Definitely not bearish. That's a good way to think, by the way, especially you counter trend traders. Oh, it can't go higher. It can't go higher. Oh, that's the top for sure. Oh yeah, it's going to collapse. No, it's not. No, it's not. Everybody's buying, right? So look at just that, just beautiful. Look at the daily pivots, huh? Day traders are crushing it. Just buying the dips. That's all it is, right? When was the last time the 21 crossed below the 55? It did it just ever so slightly. It looks like one day it was bearish at the end of June. You think that was profit taking going into Canada Day? Oh, for sure. Yeah. And then boom, took off again. And the buyers of the dips. Remember, there's two dips, the swing dip and the daily dip. And we're just riding the 21 up forever until something breaks, huh? And maybe something doesn't break. It's just money. You always have to remind yourself it's not necessarily what the economics tell you. The economy can suck, but if you have nothing better to do with your money, then it's like the only game in town. You're like, well, I can put it in the bank and earn nothing, or I'll just throw the thing at the S&P 500 and come back in 5 years, and I'll probably have more money, right? When was the last time we had 5 years of a falling stock market? When was the last time we went through a 5 year period and lost money? Well, I think it would have occurred before the 83 crash. I think it would have to be before that. So you have to go through all the 80s, all the 90s, all the 00s, then up to the 20s, right? And you're like, it's just been it's been a long time. So I think that's how investors look at the market now, where you're like, I don't know about this year, but in 5 years I'll have money. You're right. It'll work out. You might have a bad 6 months, but you'll have a great 6 years, right? Do you know what the year to date on the NASDAQ is? It's like 36%. So you're going to short that? Not yet, bro. And not in my humble opinion. I had that stat. Do I still have it here? I have the stat here on my phone. NASDAQ 36.1% year to date. Oh, for shizzle. Here's the issue. Was it predictable? So don't think 36 like, oh my God, I should have thrown my entire life savings at that. Well, if you didn't predict it, it doesn't exist. It only matters in what you predict. Okay. So if I recall, I had first quarter being bearish, second quarter being bullish. So there was a dip in somewhere, right? Let's take a look at that margin. Okay. So let's do a review. January, February, March, I predicted down. So January, February. Here's the middle of March. Okay. So, and here's the beginning of April, May, June, July. Okay. The only thing I didn't predict was the higher high. So I'm not trying to pawn myself off as, woo, I'm a genie. No, but all I can predict is direction, right? Based on what? Economic data, let's say the reality. And seasonality. So anyway, so now what? Like for example, if you can't predict the higher high, don't worry about it. Sometimes what you do is you get your direction right and you let it run. Remember that whole thing? Let your winners run. So should you get out of this now? Should you bet against this? I don't think so. It might turn, okay? So you pay attention. So even like on the hourly, it looks okay, doesn't it? Meaning, if you were going to want to sell this, couldn't you wait? Right? Couldn't you wait for a 2155 cross on an hourly and then manage your stop as if you're going to drag the 4-hour 2155 down? And if so, it's profitable. But if not, the 2155 on the 4-hour will be bullish. It'll come up and make a new higher high and knock this trade out at break even. Cool. Well, it's worth a shot, isn't it? If you can pull that off without losing, without any serious risk. Yeah, if you had research. Okay. I shorted the yens at a top. How did I do that? Remember, the yens have been up for a year and a half straight. And then one day I sell it. Like, whoa, what? Am I picking tops? No, I had a lot of research behind it, and I took a shot that had market conditions in which I really didn't have to risk very much, and then I was able to reduce the risk to zero quite quickly. But we're not quite there yet on this, right? So, anyways, it is out of position, which means we could head up and hit the monthly target first before it collapsed. So let's say there was a collapse and we get an out of position trade, which means we start at the M3 and go up. We're going to hit target early, and then there's profit taking. Different market conditions, huh? See, you can't sell this until bulls decide to get out. Do you think bulls are freaking out now? Oh my God, I got to get out of this. No, there's no technical reason for it, is there? How about up here? Weekly target, monthly target. Oh, for sure. So, or you wait. Okay, you wait. Oh, wrong one. on QuantBox, or you wait and you watch the gauges. And if this turns red, you have an opportunity to take it to get in the bearish game and say maybe a top is coming, especially if this drops -3 and this drops to 2 or 1 and this drops to 0 or something, and you see everything going back the other way. There's a couple of things going under this fundamental analysis that I wanted to release. And in fact, I released it for about 10 minutes yesterday. And then I'm like, wait, I don't like that. And I had to lock it up again. But there's some cool stuff coming. And there's a new commodity in town. I just haven't unlocked it yet because I like that we have gold analysis. Look at QuantBox is confirming. Everything's great. We have oil analysis. We have the yield on the 10-year T note. Oh, that one's not working. Okay. And so there's another one coming. There's a new one, right? New commodity in town. So I'm going to unlock that. I don't know, as soon as I have time. But I looked at it last night and didn't like the colors. Something about developers, huh? They can play with code and tables and right. They're like, oh, we have to change the server settings, right? Okay, great. Match these colors. I can't, I'm colorblind. You're like, dude, just like the rest of the entire site. You mean like blue and orange? No. Like, how about some green and some red? Matches the logo. Oh, well, I'd have to redo everything. Well, why don't you just have common sense and do it the right way the first time? But, huh? Developers are smart, but they have no common sense. No, there you go. It'd be helpful if really smart, nerdy developers had girlfriends who could shop for them and then design their work for them. Like, oh, let me pick the palette for you. Oh, yeah, that would be great. But we don't live in that reality, so sorry. Cool. So I will leave you at that. Yeah, watch the bias, watch the markets open up. Retail sales today is going to add volatility. Oh, show. Wouldn't it be cool if you knew debt levels in the United States? Like I could show you how much money's in people's banks. Wouldn't that be cool? Oh, maybe I will in a couple of hours. And retail sales are coming up, but wouldn't it be cool if you knew what people were buying? Like someone, I'm not saying who, but somebody could break it down into 3 different categories. Who's buying and what the hell are they buying? Maybe somebody could do that in a couple of hours. And you can say, okay, are they buying good stuff or are they buying crap? Are they investing the money or are they going to Applebee's and dropping a Benjamin? Well, wouldn't that be cool? I don't know. That's really hard to find out. So that's cool. If you're interested in that kind of stuff, like who's got money, who's spending money, what are they buying, and what does it mean for the future? Cool. That's one small segment of what we could possibly, if I had that information, cover today. Cool. And also, do we have inflation? And what about GDP? And what about interest rates? What about jobs? But how are we doing? How's the United States doing relative to its major trading partners? Right? If someone ever asked you, Hey, I know you're that forex guy. I've always had a question, and no one ever has the answer. Maybe you do. Um, does the United States do more business with Mexico or with Canada? And you're like, oh, well, it's funny you bring that up. Let me tell you, because I know for a fact. I track this stuff in real time, right? So, anyways, wouldn't that be cool? Well, you might be that guy. Yeah. And it's important to know your economics, right? So, children look up to you because they're small. So, anyways, I'm looking forward to that. I will see you later today, and then I'll probably see you later today, and then I'll see you later today. So, I'll see you. So, we'll go from QuantBox to forex.today to QuantBox to Investor Bootcamp. Most of you will be jumping back and forth like that. So, thank you for your loyalty, your respect, and your time. I appreciate that. Peace on earth. May the pips be with you. May your profits be above average.